Now, our next speaker, I first met him quite a few years ago now. I think it was in 2012, before his current child, OurCrowd, even existed. Back then, Jon was running another business at the time. In those 4 years since, Jon has now gone and raised almost $500 million for, 120 companies from over 20,000 investors. Jon has created one hell of a business and also put Jerusalem back on the tech scene in Israel for startups. So it really is a great pleasure to welcome Jon Medved, the Chief Executive of OurCrowd, to speak. Thank you, Jon.
Good morning. What I want to do is I want to talk to you a little bit about whether or not it's feasible, and if so, how do you do it, getting the crowd into quality deals. Because you have heard here in the UK a lot about crowdfunding. And there's I think a general skepticism saying, okay, crowdfunding's cool. Let's go get people more into this asset class. But of course, they're going to get seconds, and sometimes not such pretty seconds. They're not going to get into the best deals, right? Because the best deals are going to be left for the venture capitalists. Well, we at OurCrowd feel very, very differently about that, and we're going to walk you through that. Now, obviously, you've heard how hot things are in Israel. We're on track to beat last year's $4.8 billion with 2.3 in the first half of the year. Pace is picking up. My prediction is we'll be over $5 billion raised this year in Israel. What's really cool is how big the exits have been. This is a year now when so far, I mean, depends on how you qualify Kite, which is a LA company, but based on Israeli technology out of the Weitzman, Israeli CEO, but 3 or 4 big Mongo exits already this year, and we're not even done yet. It'll be $25 or $30 billion in value this year, up about 3 times from last year. Why do you want to get in? Why must you, as an investor, get into this asset class? And this is a slide I've taken graciously from Mark Andreessen and Andreessen Horowitz. And this slide, if you take home a slide from my presentation, take this in your mind. And the answer is that if you're waiting or hoping to get your returns in the public market the way that you used to get them, you're going to wait a long time. You're going to wait forever. No more returns. I've got to basically tell you that no more big monster returns in the public market for tech companies. Just take a look here. Back in the day, in the 80s, if you invested in Microsoft, Apple, Amazon, Oracle, you could have made hundreds of times your money. If you invested and held, that was achievable and doable. And now look to where we are today, in the 2010s. The best companies like Facebook, will give you a 4x return. By the way, wonderful. If you get a 4x return, that's great. But where's that 10x? Where's the 50x? Where's the 100? It's gone. And therefore, in this gold, which is hundreds of times your money, is the private gang. And that private gang is completely oligarchic. It is such an in-crowd, okay, that consists of potentially a couple hundred people worldwide, maybe 1,000. And if you're not one of those lucky 1,000, you're chopped liver, okay? We eat chopped liver, okay? We don't want to be chopped liver. And the reality is that you have to find a way in. How do you do it? You can't pick up the phone and call your broker at Goldman and say, get me that hot Israeli startup. So that's why we set up OurCrowd, and that's why there are other platforms trying to get people into that critical area of the private market. And there are different kinds of crowdfunding, right? There's donation, and there's what's called reward, Kickstarter. We're clearly in the equity. Here in the UK, you've got people like Crowdcube and Cedars who are doing work, as well as others. And we've had a fair modicum of success. As Hugo said, we're closing in on about $500 million, raised 120 companies, and even exits. Our portfolio is very, very broad. And what's interesting about our portfolio is it is a venture portfolio. You look at it, there's nothing second rate about any of our companies, right? We make mistakes like every venture capital group, but we're basically a big democratic tent that allows the individual investor to get inside the deals, the best deals, with the venture guys on their terms. So we're really sort of a hybrid of venture and crowdfunding. We look at thousands of deals a year. We curate them. We then lead and negotiate terms. We then invest our own money. Okay, so in every deal, about 5% of the capital is our capital. And then we invite you to join us at exactly the same share price and the same terms. And we're buying big boy paper, big boy and big girl paper, meaning we're buying preferred stock. We're buying things with protections such as anti-dilution, preemptive rights, all the traditional bennies that the venture people are getting, we're bringing to our crowd and to our investors. So it's really a different kind of crowdfunding. Don't think about a company which is essentially oriented to putting up thousands of deals and seeing what sticks. That's not what we do. We start with curation. We're checking the deals very, very carefully. We then aggregate and represent. We put people together in an SPV. We have skin in the game. We invest alongside tier ones. We have post-investment management. We're sitting on boards. The majority of our investments, we have board representation. Our business model is aligned with the LPs. We're not taking a dollar from the companies. Beware of crowdfunding platforms that take money from the companies they fund. Why? Because they're going to get a negative selection bias. Right? If a company needs to pay somebody to raise money, generally, at the venture stage at least, that's not the kind of company you want to invest in. So we take our money from the investors just the same way the venture capitalists do, either as management fees or as carried interest to success. We're focused on follow-ons. I think I just got the data today. 80% of our companies have done follow-on investments, and we're part of those follow-ons. There's some companies in our crowd, even though we've only been around for 4 years, we've done 5 rounds already, and we're very proud of that. We invest at multiple stages. So we invest from the earliest stage to the latest stages. And we invest across different sectors to provide you with the diversification, which is so critical for the crowd to get in their investment. It's all about portfolios, and it's all about working with corporations and bringing them in as co-investors and as innovation partners. So we offer, first of all, different ways for people to get in. You can pick your own companies a la carte. You can build a portfolio, what we call a reserve, which gives you a default in with an opt-out, so you get to do that. Or you can actually choose funds. And we now have 9 funds launched in different areas, different sectors, different stages, and you'll see much more of that from our crowd. We're very, very focused on the curation. We see hundreds of deals every month. We run them through a standard, actually better than standard, venture kind of filter because we use the crowd and the inherent wisdom of 20,000 people and their contacts and their knowledge and understanding to help us filter these deals. We aggregate, so we put everybody together in essentially a single company venture fund, which we then act as the GP, and then we write one check to the company. So rather than the company getting 100 or 200 individual investors they have to manage on their cap table, they're getting one check. So we look to the company as though we're a venture fund. But you get this venture fund that has 20,000 people and the ability for that to act as a force multiplier for that company. And then we invest with the top people, and this is, by the way, a very partial list. I looked at this today and said, where's Mark Benioff, who we invest with, and where are people like Li Ka-shing in Hong Kong? They're not there. In terms of venture funds, we invest, it was very flattering for Nimrod to mention us in the same breath with Sequoia, but I think we now have either 3 or 4 deals with Sequoia and with Excel and with Li Ka-shing's Horizon Ventures. We're investing with the best guys in the industry on the same terms at the same time. We add value to our companies. So this is a happy picture of one of our Toronto entrepreneurs. By the way, we're very, very focused on building a global platform headquartered in Jerusalem, Israel, but investing all around the world and bringing people in. So, for example, this CEO, Kirk, CEO of a company called Wave, which is growing like a weed out of Toronto, Canada. We're co-invested with Charles River, with Omers, with a big corporate partner, and they needed another round of funding. So they got a $25 million check out of Australia from the National Bank of Australia. How did that Toronto company access the Australian bank? OurCrowd, through Jerusalem. People come now through Jerusalem to get part of this international global network. We have a company called Zoomcar, which is leading in self-driving in India, led by an American entrepreneur, backed by Sequoia, backed by Ford Motor Company, who just became the leading customer of Mobileye. By deploying their collision avoidance system in India, they cut accidents by 85%. Okay, so you look at this sort of incredibly new and different world we're building with Israel at its center, at least in our, Weltanschauung and the way that we look at the world. We're pretty excited by that. If you do all this right, then you get this. You get essentially a portfolio where you're making news, where you're generating exits, where you're in the best deals. So people at OurCrowd last week, we saw a lot of news about Aerobotics deal. We're in the Aerobotics deal. More news about Innoviz. We're in the Innoviz deal. Okay, so it's not like you're getting some kind of a company which you never heard of before. These are the leading companies that are making the future out of Israel, and we're putting the crowd into it. Also important is we're getting exits. And we're taking them public when the public markets cooperate. Very, very excited to hear that there are 30 companies traded here. And we're also enabling M&A transactions. So we'd like to invite you all, if you guys like to go to conferences, to join us this coming February 1st in Jerusalem. We're having our, I think, 4th annual summit. Last year we had 6,000 people. This year we're expecting 10,000 people. It's a great day, doesn't cost anything, just come with an open mind. We're bringing delegations from about 50 different places around the world. 10,000 people in Jerusalem. Again, thank you to Hugo and thank you to this great team for doing everything you do to build the ties between Israel and the UK. Thank you very much.
Thank you. Thank you very much, Jon. I'll just take the clicker from you. That concludes the Follow the Money section of this morning.